Hello and welcome to Project Trade. It is the trading highlights show and we are looking at a technical trading strategy. One of the most typical messages that commentators of technical trading analysis will pummel you into submission with is that no single indicator can be used to consistently make money. Our strategy today involves the use of two indicators, both in the trend category. And they will be the 90-period exponential moving average and the parabolic stop and reverse, the PSAR. We'll take a moment to explain these indicators, but there are videos for both of them linked in the description. Firstly, the 90-period exponential average is a price average on your chart which tries to respond quickly to changes in price by using a most recent, most relevant formula. This therefore gives it faster responses than the simple moving average. We've gone for the 90-period in this strategy as we don't want something that's constantly chopping and changing with every minor price movement, but we also don't want something so slow that we miss the move. Now to the parabolic stop and reverse. You can see how this one's going to appear on your chart. It'll either be above or below the price depending on the price action. It tries to get you decent entry points within trends rather than necessarily catching full reversals as the name might imply. So what will our entry criteria be for the strategy? For the 90-period EMA, when it is sloping upwards, that'll be an indication for us to be in buy trades only. When it's got a downward slope, it will be a signal to us to only enter sell trades. Then with the parabolic stop and reverse, we will be using the dots being below the price as an indication to enter a buy trade. And when the dots are above the price, we'll take that as an indication to enter a sell trade. Much like a game of Snap, when both indicators are matching up as a signal for us to either enter a buy or a sell trade, that is when we will get in. Just note, however, that for our first trade of the session, we won't jump in on the middle of a parabolic stop and reverse move. We'll be waiting for a fresh pattern to form when the first dot in a new move closes. Here are both indicators on the chart together, so you can see what that looks like. Those red circles there, they would be our entry positions. And as I've just said, we will have to wait for the close of the first parabolic dot before we enter. This gives us a lot greater certainty over the signal. It's a more complete confirmation of the trend. And based on this purpose-built cherry-picked chart, you can see that we'd hit a couple of really nice runs here. This particular chart is certainly making me feel confident about the strategy. So now it's over to our money management. First off, every day, hundreds of thousands of people ask me, hey, is trading going to be expensive? Am I going to have to siphon some funds back from one of my offshore accounts to be able to fund myself trading? And to those millions of people, I say no. Push that money a little further offshore if you need to, because there is a simpler, cheaper way. We're going to be opening just one trade every time we get our entry signals, no splitting of trades. The initial stop loss will be at 2% capital risk per trade. And in fact, our stop loss will always be a trailing stop loss. And the distance we're going to use is already built into one of our indicators. And that's the dots of the parabolic stop and reverse. For example, with a buying move like this, we'd begin by placing the stop loss at the bottom of our entry dot there, which is the second dot. And as each new candle closes, we will manually trail the stop loss to the bottom of the next dot, and so on and so forth until the price falls beneath the dots, causing the stop loss to trigger. We're also backed up by closing the trade manually if we see either of our indicators close against what they previously told us. Both indicators have got to be showing us the same signal that they gave us when we first got into the trade. And those stop losses should be able to do all the work for us, so there is no take profit in this one. Our time frame will be the 5-minute chart, so hopefully we'll be getting in and out of some quick moves. Do prepare for a noisy chart on the 5-minute though. And we're playing on the Forex charts, the pound Swissy. We're only going to go with one currency because the 5-minute chart will be quite quick moving, so we'll want to stay focused. And lastly, everything will be journaled, as we do at least like to try and learn something from our strategies. But that is everything, so we are now ready to give it a whirl. Here we are at just gone 11 o'clock in the morning. We've got the parabolic pulled up with the 90-period exponential average there in blue. And we can see on the 5-minute time frame, this has been going through quite a sell-off. It did have a run up here. There it went up about 31 pips, but then since then, that has come down quite significantly. That was 9:25 that started just about an hour and a half ago. And since then, big sell-off there, 46 pips down, just to come into a range at the bottom here at the moment. On our economic calendar today, we've got quite a lot of manufacturing services and composite numbers coming out, all for the Purchasing Managers Index, the PMI. You can see we've already had Australia and Japan mostly missing their targets. And then just recently we've had France, Germany and the Eurozone as a whole. Again, most of them missing their targets. The pound are releasing their numbers in 25 minutes. That's at 11:30. So we might see a little bit of volatility on the chart as we are trading the pound Swissy. And then the numbers for the US dollar coming out at 4:45. And then at 5 o'clock on the dollar, we've got existing home sales coming out. Unlikely to have any major impact on the pound Swissy, but you never know, the dollar is the most impactful currency. But yeah, not a huge amount for us to watch out for. Most of these PMI numbers have already fed through. We will be watching the pound numbers at 11:30 and the dollar numbers at 4:45, as well as those existing home sales at 5 o'clock. But it should be smooth sailing on our technical strategy. We shouldn't get unexpectedly knocked out by any of the numbers coming from those. Let's get back on the chart and see where our entry could be. So at the moment, we're getting opposite signals from the indicators. You can see the moving average is going downwards. That would mean sell trades. However, the dots have just moved the last couple periods, have moved underneath the price, which would be a buy trade. So if those dots switch back over, that'll be a sell trade for us. Or if this 90 average starts to turn upwards and these are still underneath the price, that would also be an entry signal for us. That is what we're looking for as price starts to rebound for the pound here. Now getting upwards pretty quick. Price continuing to tick up here, another green candle. 5 minutes until those pound purchasing managers index numbers come in. Price losing a lot of those gains over the last 5 minutes. That's a big red candle and it's almost coming through the dots. So we could be in for a sell trade in just a few moments. But now we're waiting for those numbers to come in. And there we see the dot switch above. So if this closes like this, that will be a sell trade as we've got the 90 going downwards. And there we can see the results of the manufacturing and services purchasing managers index, both of them underperforming by just a little bit. So the purchasing managers out there not quite as happy with business conditions as expected, which might signal a little bit of a weaker pound, but we didn't see any increase in volume in it. So it's unlikely there's too many are watching it for trading purposes. Here we go then. Even though price has come quite a bit back up and is likely going to finish green here in the last few seconds, the dot remains above, so we're going to prepare ourselves for our entry. So right here we've got 11.3 pips there. That'll be our stop loss distance. And so there you can see our risk calculated on screen now. That is for $200 thereabouts. Let's get in that trade. And all we need to do to set our stop loss is just drag that all there to the edge of the dot. When this closes at 11:40, we'll be able to drag that stop loss down to the next dot, presuming it doesn't come back up and knock us straight out. And there's our trade there. Should have actually rounded up that volume to 1.62, just spotted that, but 1.61 will have to do. Okay, let's see how we get on then. Worst comes to worst, we just lose 2% of the capital and that's it. We can see the dot has shifted just a little bit, so I mean, we'll move this a little bit. I mean, you don't have to be precise with the way you're putting it. I tend to put it towards the top of the dot or the bottom of the dot if it's underneath, but it's up to you. If you want to go for dead center or you want to go at this side of it, that's up to you. Our point of guaranteed profit is if we can drag this stop loss far enough that it goes past our entry price, because we have no take profit in this. We're fully reliant on the indicators telling us to get out or our stop loss right there. Price making a little break downwards in our favor there as we continue to just move this stop loss up. It does make you feel like you're sort of clamped in when you've been bringing your stop loss down and then the price is coming back up as well. Looking a little bit shaky at the moment. And as we move the stop loss here, we are basically going to condemn the trade to be over. In fact, it won't even let us move it. There we go. So it triggers anyway, and we didn't manage to save a little bit. I was about to manually close it, but that just ticked over enough anyway. There's the trade. We were able to mitigate some losses due to the fact that we were moving our trailing stop loss with the dots, but really not a lot. Only about 10-15% in between that range there. Not a great start for the parabolic stop and reverse, but let's see if this 90 can turn upwards. Now we've got the dots underneath, see if we can get both indicators matching up. 90 period exponential moving average is ticking just up now. So if this closes like this, then we will have both buy signals from the parabolic and from the EMA. So we'll start to gear up our trade for entry. Would have liked for price to pull back a little bit more than it did. This does feel a bit far from home. Let's see what our distance is. 25.7 pips there. Okie dokie. So we'll round that up to 0.70 lots. So you can see all that risk there. And let's go in with our buy trade. And there it is. And it does feel like it's going to be at the top of price. It really seems like it's going to come back down, but who knows? Here's hoping for some upward momentum over time. If we are going to make profit, it is going to be a long way away because that is how far our stop loss is. So those dots will need to come all the way up there. Not impossible, as we can see over here, they did go about that far or further on this downward trend here. That was 37.8 pips thereabouts. Not feeling the best about this trade then. Even if price doesn't come all the way back down to the stop loss, or the dots don't make it all the way back up, there's a good chance price will come back down enough for this EMA to switch ways, and then we have to close the trade, as that will no longer be giving us the buy signal. Still though, it is only the first session. Let's not lose all of our faith in the parabolic dots just yet. Price really going green here though. This is looking nice. Let's keep that move on. And that is 10 straight green candles on the 5-minute chart. Nothing able to stop the relentless British pound here as it's moved past this level of resistance here, cleared it with ease, and we get to move our stop loss again once more, even closer to our entry level, aka our take profit level. All good things must end though, as the streak does finish at 10 green candles, but look at how close we are now. Let's get that up again. This is getting very close to profit here. Price took a breath there for a couple periods, but it's moved into new highs again. The big news though, we do get to move that stop loss into the take profit zone, so we are guaranteed a little bit of profit, even if price suddenly dropped like a jackhammer now and took it out immediately. It's just a question now of how much profit can we take off this trade. At the moment price has slowed, which is understandable, but it is great to see every 5 minutes we do get to keep trailing this stop loss up, maximizing those profits. And you guys saw the footage. I was not optimistic about this entry position. We got in round about here after a good few green candles already. I absolutely felt like it was going to just reverse off of this level and go straight back through our stop loss, and then maybe bounce off this support here again and just keep in a range for a while. Very pleased to be proven wrong and see that a trend has formed here. Let's hopefully see it keep going after a bit of consolidation. Or who even needs consolidation? Just have it keep going, why not? Still been finding those highs, but at a slower rate, and now the gap between price and our stop loss is very narrow. Unless we see some more green candles coming soon, it will be likely to trigger. And it hasn't quite triggered the stop loss there, but you can see the parabolic dot has switched above there, very close to the stop loss though. It does look with a couple more ticks it's going to trigger. But if it does not, and this dot stays above there, which is what it's going to do, then we will close the trade at the end of this period anyway. And there it has triggered, but that was a very profitable trade for us. Got both trades pulled up on the trade history here, so you can see where originally we got knocked out there, and that was for a loss of 168 plus the commission is around about $176 down. But then we did get straight back into that buy trade to say, okay, we're going to go with the trend. Well, we didn't, our system told us to do it. And we were very fortunate in this instance to get a really nice run up all the way here for a profit, which in the end doesn't just make back all the losses from that first trade, but actually puts a little bit in our pocket as well. So now we've either got to wait for price to come back up and for those dots to go below it to give us a buy entry signal again, or have this 90 period exponential average turn south while these dots are still above the price, and that would get us into a sell trade. Price mostly just ranging now, did come down a little bit, but there's definitely no definitive move either way at the moment. And price there shunting over the parabolic dot to the bottom. That does mean that in 3.5 minutes when it closes, we will be in a buy trade. At the moment, we're looking at a pretty narrow distance between the price and where our stop loss will be. Here we go then, we've got this 90 period exponential average sloping clearly upwards, and we've got this dot about to close here. Let's see what the pip distance is going to be. From the open of there to the bottom of that, it's just about 10 pips or so. Let's go in for 10 pips. There is our risk on screen now. Let's get in the buy trade. Then we just drag our stop loss just to the bottom of that one there. And that should be pretty much 2% risk, which is a little over $200 as our balance is above the starting 10,000. I don't know how confident I am in this though. I do think the dots are going to get tight to the price. It's probably going to range a little bit, but it really is a bit of a flip of a coin as to which way it goes. As this alleyway here, it does seem to be bouncing up and down between before we get a complete decision. Price finding new highs here. It does seem like it wants to carry on that overall upward trend. Well, we prayed to the candle maker and we did get a big green one there. So we get to shift that stop loss up. It's very close to our entry price now, which means very close to being a guaranteed profit. If we do get another candle like that in the next couple candles, we should have some really nice profits coming in. Let's see how it goes. It is, of course, my pleasure to move this stop loss across the entry price and into guaranteed profit. Getting better every period as we shift it up again and price finds new highs once more. Very good to see. For us, not for the people who are short. Just into the new period here, and our stop loss is incredibly tight to the price. There's a good chance it'll get knocked out unless we see it go full green from here. This is getting very close here, almost at our stop loss. We're just hanging in there. And we do see enough of a backswing there in price for it to trigger our stop loss. But a very good run though. Really nice trade. Happy with that one. There it is. Finishes up around about plus 168 after commission. And we can see even though we took a lot more pips on that one there, that was about 30 pips we took. This one down to about 10 pips. But because the volume was such an increase, because of the tighter start there between the entry price and the stop dot, we were able to get quite a bit more profits out of that shorter distance. Now we wait for either that 90 period to get a turn on and start getting downwards, or we wait again for the overall long trend to continue and for these dots to get back underneath the price. And now it has turned. It's turned pretty sharply. Last two candles, 10 minutes. Very red there. Very red price action. Price has been selling off at such a heavy rate here that we're actually getting a sell signal as the EMA is about to close downwards. So we're looking at it now. It just rolls over and closes. That is quite a way between our price and our stop loss where that'll be. So we're looking at 28.6 pips. That is our risk calculated on screen now. Let's get into this sell trade. This sell-off is continuing a little bit to our favor. Don't know how long the momentum can last. Again, not a big fan of this position to enter in, but I did say that with a buy trade earlier after we'd already seen quite a bit of upward momentum, and that still yielded some pretty good profits. So I'm certainly willing to give this one a chance. You just always get a little bit nervous with that 90 period average that it's going to start turning up again after a bounce, and then you're forced to close the trade off for a loss. We'll stay optimistic though. Bit of a bounce there which we'd like to see reversed. That's just after the stock market opened at 4:30. Should be getting those PMI numbers from the US in just a few seconds there. Not expecting any major impact from the dollar onto the pound Swissy pair for these numbers, but it's still interesting to see them as the dollar, it is the most important currency going. How have those purchasing managers answered the questions? What are the orders like? How's business doing? Is it good? Is it bad? Still waiting for the services numbers to come through, but the manufacturing and composite are missing their mark by just a little bit. Not enough for anyone to go home crying tonight, but they are slightly down from the expected. Price just hovering between our entry price and our stop loss has been for a while. Price hasn't really moved, but the stop loss has continued coming down. At least it's limiting our losses, as we said, but it's not looking that profitable at the moment. And price getting very close to our stop loss. We can also see that the 90 EMA has actually turned ever so slightly upwards as well. So assuming it's going to close like that if price stays up, that will be an indication for us to get out of the trade. We won't need to manually cut ourselves off though, because the price has done it there for us. And that will actually be a buy signal for us to get right back in because of this turning as well. It does feel a little bit skittish getting right back in. Hopefully this is a true reversal. It's because that 90 EMA, it's in a bit of an indecisive period. Where it was in a clear trend here, it did well to keep us out of this trend over here. Look, these dots, we were not a part of that. We got back in when the buy trade signal came again. But here, this is a little bit touch and go. If it comes back down over the next couple candles, we will find ourselves manually stopping this out. Let's see how many pips we got to the dot. That's 20.4 we'll go for. So you can see our risk on screen now. Okay, and we'll just drag our stop loss, as we always do, right down here. Bit of a distance again this time, 20 pips. We can see on our trade history, that was our loss just before we got in there, and there had been a huge amount of momentum already. So not surprised that it ended up stalling, and we got cut out just up there for a loss of around about $75. Now we see price comes back down against us right after we're in that buy at the very top. We do have a little bit of room to maneuver with that stop loss, so hopefully this is just momentary. We don't want to see this EMA turn. Price hovering just a little below our entry price at the moment, not looking too bad, but hopefully it is a true reversal, at least up to this line of resistance here. But we have seen the services come in and they did miss the mark just a little bit there, 55.2 versus 59.9 expected. And we've also had existing home sales come in just at 5 o'clock. Again, it's on the dollar, so not much impact on the pound Swissy, but we are seeing a bit of a beat on the figures, 5.99 million against 5.56 forecast, and that's 2% against 1.3 on the month-on-month as percentage. Last couple of periods, price coming back in favour of us, heading towards our entry price. We're still in a loss and it's coming back down now a touch, but hopefully this trend continues and we find it going upwards again, creating a nice sort of V shape down here. Price coming down quite a bit here very quickly over the last minute and a half. It's looking very likely to have a stop loss if it carries on that way. We're seeing the 90 go a touch downwards as well. Almost certainly this is ending as a losing trade very shortly. There it does trigger the stop loss, turning both the parabolic dots and the EMA on the same candle there. That was a very quick rundown there in just a few minutes. That EMA getting us into the trade quite unstable there. There's the trade, and it's just that one big candle there where the EMA, it does know what to do. It's been flat for a while. Price rushes up, and so it goes, okay, we'll go up as well. We say, okay, we'll take that as a trade in. We do. It turns out to be right at the very top. Price comes back down, triggering us out down here for quite a bad stop loss in the end. We didn't get to save as much profit as we would have liked to, as it was just sort of trundling along in that range there. It's knocked us out of profit as well, that trade. You can see there we are down $48 for the day. Had a couple nice trades, but 3 losses. Hopefully we'll be able to make some of that back in our second session tomorrow. We are back now just after 10:30 for session 2. We are on the 5-minute chart for the Great British Pound against the Swiss franc. Bit of a sell-off been going on here. Price coming downwards quite a lot. This would have been a nice run up to be on. We would have got in around about there and gone all the way up to that level there before getting knocked out. And look at this candle that happened just after midnight last night. So it was up and down 0.25% within 5 minutes. Kind of crazy. Seems weird to me, especially since there's hardly any tick volume off the back of it. Bizarre candles. We want to wait for a new move rather than busting in on this one. That means either the EMA and the parabolic indicator turning upwards, so we're getting a buy trade, or even just one of them turning and then turning back. Here's our economic calendar for the day, and we see not a lot been going on. We did have retail sales quarterly coming out of New Zealand, and they did actually beat them quite nicely. Forecast at -6%, but they came in actual at 3.3. Similarly on their yearly figure, they beat the forecast of 2% by quite a bit, getting at 33.3. So positive numbers for the New Zealand dollar there. Also GDP figures coming out quarterly and yearly for Germany on the euro. They beat their forecast by just a touch. The quarterly is 1.6 actual against 1.5 forecast, but not a huge amount going on for the rest of the day. We've got ECB board member Schnabel making a speech at 3:30. I doubt she's going to come out and change interest rates, so probably not going to be hugely impactful there. Could be interesting in general to see what she says though. Otherwise, there's new home sales at 5 o'clock for the US dollar. So we had existing home sales yesterday, which had a little bit of a beat, and then we get new home sales today. Other than that, literally just the South African rand unemployment. So there's nothing for the pound or the Swiss franc on today's calendar. Hopefully no crazy tweets from Guy Parmelin to mess up our strategy. We are all in on the technical basis. All we need to get us started is that new move. Price continuing its downward trend though. Could be a while before we get that entry signal. It would have been a profitable trade for us to be in. Not as nice as it looks, because we wouldn't have caught most of this move. The EMA was still going up or flat at that point. It didn't close sloping downwards until after this candle, in fact, so we would have got in around about here. But as you can see, the dots were already past it, so we would have been in a little bit of profit as our stop loss would be there. And price is continuing on that downward trajectory. I still think it's right at the start of the session to not just jump in on a move though. It's just not proven correct right now. It's a real sell-off of the British pound here. Big red candle rolling through, biggest of the session. I think the reversal is finally due as we see that hammer candle there. Look at that, and it's on an increase in volume as well, and a hammer candle on a 5-minute chart. Surely that is a signal that price is about to bounce big time. And we have seen the dots flip sides now to get underneath the price, but not a lot actually going on with the price itself. Sort of stalled at the moment. The bounce looks pretty real with that green candle right there. That is quite a large one. If it carries on that way, we might get that exponential average to turn. We'll certainly see these parabolic dots start accelerating quicker with the momentum. It comes down just as quick as it went up though, back into the range it goes. Still ranging here about 30 minutes on, the moving average does continue downwards and the dots do continue upwards. Something has got to give sooner or later. Now we see the dot flip there above the price. It has broken, so once it closes, we will be getting in our sell trade. Here comes the close. We got both indicators giving us that sell signal now. Let's measure up the open of here through to where our stop loss will be there. That's about 14.9 pips based on our balance of $9,951.78. You can see our risk on screen now. Here comes the trade, and we'll just shimmy that way up there, and we're in. There you see it all. Let us hope that this carries on into good fortunes for us. People selling off the pound would be very nice right about now. And let's get these dots all the way past that entry price line into some guaranteed profit. Not much price action going on at the moment, hovering around our entry price. Price with a strong green move there, not what we want to see. It is getting very tight there between the price and our stop loss. Looks like it's going to trigger. It's right on the edge of this resistance area here now, the stop loss. It's not a great area to be in because it could trigger and then price could bounce back off it and come down. Hopefully it just comes back down immediately. And there goes the stop loss. Hopefully it does continue upwards. If it can get above that average, it'll flip the dots and it will also, there we go, you see it flipping the dots like that there. And it will also eventually flip that average and we could get into a buy trend if it breaks through this resistance level here. That would be quite nice. And we have actually seen the EMA just close upwards a touch. You barely see it, but it is 1 pixel up. So that is a buy entry for us, shaky though as it may be. So let's have a look. How far is it? It is 20.8 pips we'll go for. You can see our risk on screen now. Let's buy. It's even had a bit of a run up there. This doesn't make me feel confident, honestly. The fact that we're just going off the 90 coming in here, it really often does feel dicey when we see this 90 just tick up a bit after this run of momentum. Price could very easily come back down here, very easily come back down, and then we have to close out the trade for a loss. Maybe we shouldn't be closing our trades if this turns down. Maybe we should only be closing it once it passed the dots, but then potentially opening yourself up to more loss. It's tricky, it's tricky. It does continue in our favour so far though, a lovely sight to lay our eyes upon. It's just coming down a bit there the last period. We are getting close to guaranteed profitability, but if we see many more candles like that, then we are going to get stopped out. Hopefully we can just hang in there for a few more periods, get these dots across the line, get one more push. And as we move the stop loss up here quite a bit, that is very tight. It does look as though this is going to trigger over the next period or two now. And there she goes, price rushing down. It does flip the dot above the price as well. Now, if that EMA does turn downwards, it will be a double signal from the EMA and the parabolic dots to get immediately back into the sell trade. That's what you want. You immediately want to get back into trades. Yeah, that sell-off accelerating for the British pound there, red pouring out of the candle there, and we have seen the EMA close down. There's the dot, there's the down EMA, so this will be our entry. That's 19.7 pips. Our risk is on screen now. And we're in. We are right back in. In my opinion, it does feel as though we're going to have missed the move and that maybe this is going to continue upwards, maybe flipping that 90 period average once more. But we can hope. Moving a bit to our favor, which is of course good to see. Just ranging a bit last 20 minutes or so as we continue to bring our price down. This is similar to what happened in the last trade, where we were in a buy and it stayed just a little bit within profit for a while before plummeting back down. So we could see the reverse here. This stop loss might tighten over the next few periods and then suddenly a rush up to the buy side may knock it out. We will see. And there it is. That is the exact run up in price now, knocking the stop loss out. That one again, not massive. We were able to mitigate some of it, but it really is a bit of a mirror of this trade over here where it ranged for a bit, came down, knocked us out. Here again, same thing, knocked us back out. But let's see if this EMA can turn upwards and have this price come up a little bit more. And then hopefully, fingers crossed, we can get right back in. That's all we need to start making money. There we go. We can see now the dot has flipped. The EMA has just started turning upwards. If it closed like this in 2 minutes time, we are officially back in, straight back in on the buy trade. As we close off that period though, the moving average not tilting up in the end, still going a little bit down. Let's hope for those green candles to keep on coming. It's an impressive flatness of the EMA now, holding completely still for the last 3-4 periods. Don't see that too much. Breaks to the sell side and breaks hard. Big red candle coming out here. Price just moving there enough to flip the dot above the price. So assuming it closes like that without a giant green period to reverse it, then we will be looking at a sell trade in just under 5 minutes or so. Here comes the close, so let's ready ourselves here. It's about 13.5 pips that we'll go for our stop loss distance there. There's the risk on screen now. And there's our trade. Now let's everybody sell that pound. Really nice move going down for us here. That is exactly what we want to see. Another sizable red candle there closing. Great to see as we shift this stop loss. Price coming back up a bit over the last few periods, but it is with great pride and honor that we are able to drag this stop loss over into a guaranteed take profit, even if it spikes up like crazy. It's a very happy moment for us. Price running up as we move the stop loss down. This is very tight here now. Yeah, and it has procced it, but that is still a good win to get back a lot of the losses from this morning. Don't think we got back all of them. Still a ways shy of that, but a win is good to see. Price actually roaring out here, very long there. This is just after the US stock market opens, so not sure if any investors from there are having a knock-on effect. And we are getting the immediate buy signal back in here. I don't know if this is going to be the best, but we can see the EMA has ticked up here and these dots are underneath. So let's measure that out to get our volume. So we'll call that 26.9 pips. That's our risk on screen now. And here we are getting right back in. And a very wide stop loss to begin with. I don't know if this run-up's going to last. If I did, I would know which way to trade already, but it doesn't make me feel confident. I do feel momentum is going to stall, and there's going to be at least a retracement before we see an increase in the move, if the move continues at all. Trust the system. And we're already very close to that EMA ticking down. If the candle finishes red, that EMA will be poking down, and we'll have to close it at that point. That's the thing, we've got the space on the stop loss for it to take a retracement back from this momentum and then carry on going. But because we're closing the trade when this 90 EMA turns back against us, that's what's causing the problem. And even though it might stay steady around this area, it could still be enough for this EMA to turn back down. Don't know how clearly you can see it, but that line has just ticked down there, and so it is on a downward trend now, which means we are going to manually close this trade off for one more loss. And I'm going to say it now that that will be the end of the session. I've got to get it in there quick before this EMA gives us another signal and we have to jump straight back in. It was 4 losses and 1 gain for us today, and what a very rangy day it was. You can see how many trades we were in here. We were in a sell trade here, then a buy trade, sell trade back there, another sell trade, and then a buy trade in there. Not ideal to be jumping in like that. We really want the long trends, the ones that finish just before we start trading in the morning. Those are the best ones. There is still a chance that we can get our money back in the third session, but we need something definitive. We need two big moves, one of these and then a bit of a retracement and then come in with another one. That's what we need to get a lot of money back. It is day 3, the final session, and it is about 11:45 here on the Great British Pound Swiss franc chart. We got our EMA and Parabolic stop and reverse pulled up as always, and these indicators have been giving some very sketchy signals. If we had started trading before 10 to 10 there, look at this, we'd get in a buy signal after the first dot closed, so we'd be in right up there, only for it to reverse into this dot. After that one closed, would we have been in a sell trade there? Let's zoom in once more. Yeah, we do see it. We do see the EMA there just about going back down, so we would have been in a sell trade for that one. And then back into this buy trade here as the EMA turns up and the dots go under. So that would have been around about there. Immediately back down, and then we would have been in this sell trade here, which at the moment we would have been down a little bit. Who knows where that's going to go? But it would have been 3 losing trades within 6 periods there, and currently 1 in a losing state as well. Really choppy. Not sure what's caused that volatility there. And this is sometimes where the 5-minute chart could really do you over, or the 1-minute chart would be even worse for this. It'd be awful. If you think you could have navigated this to make some profits with, say, this buy trade and get some from this sell trade as well, I would be very interested to hear about that. At the moment, the trend is fully down with those. We've got the dots going down and also the average as well. As per usual, either need for both of them to turn to give us a signal to get into a buy trade, or for one of them to turn and then turn back. As long as they match up outside of the first trend of the session, then we are in. Here's our economic calendar for the day. Not much been going on so far. A little bit of numbers, trade balance and construction work out of New Zealand and Australia respectively. Ahead for the day, again, nothing at all for the pound Swiss franc currency pairing. 11:30 for the euro coming out of Germany. We've got the Institute for Economic Research. It's their business expectations done on a whole bunch of monthly reports basically. They give it out to all sectors to see whether things are going good or bad within the current business climate. And that all feeds back into a score here. As you can see, forecast around about 100. They are getting just above those numbers at the moment on the previous. At the height of the pandemic, they got as low as about 75 or 80, just to give you an idea of the range. It is seen as pretty relevant to the current business conditions and climate, but whether it has any impact on the Great British Pound Swiss franc, unlikely I would say. We'll watch for it still though, just under 40 minutes until that. At the same time, the European Central Bank Vice President de Guindos will be making a speech. Unlikely to cause volatility, but maybe we'll check it out. 3:30 though, US durable goods. That could have a knock-on effect. Durable good orders month on month and core durable good orders as well. Certainly more likely to have an impact than the Mexican GDP or Brazilian mid-month CPI. If we do get knocked out of a trade because of increased volatility at 3:30, then we know exactly why. It's not going to change what we do within the system, but I think it's good to see this stuff. You can see what does have an impact on the currency pairings and then adjust your strategy accordingly. And sometimes you can say, hey, if a trade signal comes at 3:25, I'm not going to take it because I think that volatility is going to increase and it's just going to swing the EMA. It's going to knock me out. And 5:30 on a Wednesday, it is standard, the USA oil stocks. Very unlikely to hit the British pound Swiss franc, but maybe we'll see the numbers come through. Depends if we're still trying to claw some money back from all the losses we've had so far. So no direct impact from the economic calendar onto us today, but we will be checking out that German Institute for Economic Research, their business expectations reports, and also the durable goods orders at 3:30 on the US dollar. Seeing some green candles coming now, and the EMA is tilted upwards. So if price carries on up and knocks that parabolic dot down underneath, that will be an entry signal for us at the close of that dot. Right now, the price just coming back a little bit. Let's see where it goes. And there it does knock the dot below the price right down there now. Here comes the close. Let's measure ourselves out now from the open of that candle there all the way down to there. That is 12.3 pips. And still going for 2% risk capital off our current balance of $9,760. There's our risk on screen now. And we're in. Hopefully that momentum hasn't gassed out and this can keep on going. Let's shimmy that stop loss right down to the bottom. It does have a good ways of moving. At the moment, it would be more likely that the EMA would turn against us after a few red candles rather than getting stopped out all the way down there. If it can breach this resistance level, that's where we'd be in a good chance of money. If it could get through this sort of area here, that would be very nice, even if it has to consolidate before it makes the run. So immediately on the next period, the EMA has turned back down. This is very shaky, and this is something we've noticed over the last couple of days. So I'm not entirely sure whether to throw out the system of saying, hey, let's wait for it. I tell you what, we will close this trade on the basis that the EMA has turned against us. But if this EMA turns back up again before the parabolic dots switch, or before the stop loss would trigger on the parabolic dots, then we will scrap that rule for the rest of the day on the EMA, because it is a bit shady, very shady in fact. Price selling off a good bit more last period though, proving like the correct decision at the moment. The whipsaw we're getting on this 5-minute chart currently is very difficult to manage. It almost came down and triggered the stop loss down here, or the would-be stop loss, but then immediately bounced way back up, and suddenly it's looking like with another one of those green candles it might turn the EMA again, or maybe it will just come right back down. It's very difficult to know what's going on here. And there you go, you see the EMA suddenly ticks up now. Is it just a case that we will get back in around about the same spot we got in before? Let's pull that up. Yeah, I mean, we could just end up in the same thing again, get up here, have a red candle come back down, and then immediately have to stop out again because of the EMA. And you can see here it is going to close upwards once again just a couple periods later. What we're going to do is we are going to take the trade, so we'll measure that out there. It's about 10.7 pips we'll go for. If the EMA turns down again, we're not going to take that as a signal to close this time. We have had enough of this EMA that's moved upwards, downwards, upwards, downwards. I think it's changed about 7, 8, 9 times in the last 2 hours. Risk on screen. Just in case anyone thought the 200 might do a little bit better, you can see it was still up. It came down a touch there before going back up again. There it comes down, up a little touch there, a bit more, back down, up again. So not a great amount of more consistency, even if we were using the 200 average, to be honest. Price coming down a bit now, and that moving average is tilting downwards as well. Even if it closes that way, we are going to ignore this particular signal and leave it all to our stop loss on the dots, because this average could just keep flip-flopping up and down. This period itself could change it from up to down, and we've seen multiple 1-period changes over the last 20 or so. That is a very flat 90 period at EMA, last 3 or 4 periods staying dead straight. EMA now closing downwards, so that would be the signal for us to close the trade. Going to move our stop loss up here. So whether that makes any difference to all that, I mean, we'd be closing there versus here. It's a very minimal difference. Probably good to just let it run, see if it will come back up. And there goes the stop loss. So we did lose a little bit more. We could have closed off straight away with the EMA, but only a tiny bit of difference. If it closed like this 3 minutes, we will be right back in with a sell trade. And that's great news to get right back in a trade in the middle of this range. The system works. There's the close. So let's get into this sell trade. Exciting stuff. Hopefully get a trend here. We are getting in at the bottom of this support level here. Bit shaky as always with these parabolic dots, but hey, let's get in, see if we can win some of this money back. Call that about 12.9 pips. And there's the risk on screen now. Already we've missed a chunk of this move, just less than a minute into the candle. Good stuff. Let's get in. And there goes that stop loss up there. We'll probably see it trigger around about this area. Price will range now across this level, and then as these parabolic dots move in, eventually this will kind of shunt up a little bit and it will proc the stop loss, probably around about 1.25400 or so for a 1% loss thereabouts. Just ranging around above our price a little bit at the moment, not a lot going on. And it does trigger our stop loss there. That was at 407 after the range. This candle looked promising actually, because it dropped down quite a bit, and you can't see, but this put us ever so slightly in profit for just a second there, but it goes up and up and up, and it does trigger that there. Hasn't flipped the dots or the EMA just yet, but that could be to come. It is another losing trade though. You can see all three of them, and it's just over $100, so we are currently $388 down for the day. We'll plug on though. Hopefully this price cuts up through the dot there, this EMA turns, and we get a buy signal to get us back in. Not looking promising though. Yikes. Has flipped the dots now, but not the moving average. That's still going downwards. If that gets upward, we get our buy. Currently needing a $630 winning trade to get us back into profit for the overall strategy. I feel it's coming. It's got to come. So the EMA has just closed with a single pixel upwards there. It's just ever so slightly gone up, but that does mean that both of these trend indicators are giving us the go-ahead to get in the trade. So let's measure out our stop loss. 10.9 pips. Our risk is on screen now. And we are in once again. The buy trade is here. The moving average ticking up, looking a little bit flat again at the moment. Price coming quite heavily against us. The EMA has closed downwards, but because we're still inconclusive about whether it's better or not to actually just instantly close the trade again, we are going to let it run at that a little bit more, and so we'll ignore the EMA and we will go purely on the stop loss at the dots just to see how it goes. Because this period alone, we could have a green candle that mirrors this one from 2 periods ago, and this will tick back up by 1 pixel again, and then that will be 4 times on the bounce then that it's moved up and down by 1 pixel, which it is very close to doing now, the EMA tilting up once again just 2 periods later. Price coming a bit back down again. Just looking at the range of this total alleyway here, this is 0.14% there. Incredibly narrow. Price getting a wriggle on now. It is moving against us. And there's the stop loss. It didn't actually stop a loss, but it looks like it might be stopping more of a loss. And those dots flip over, which mean we are in a sell trade at the end of this 5-minute period if this confirms like this. If we close that off, it would have been at the end of this one, so it would have been closed off here. Instead, we got tripped out round about there. So we certainly did deepen our loss by giving that one a try. So let's buckle up for the next one. This candle about to finish green, in fact, but we are still getting that sell signal there. Let's measure out our stop loss. Call it 7.8 pips. That is getting narrower as the range is just getting in quite a tight space here. There's our risk on screen now. Quite a lot of lots, to be fair, because of how narrow that is. Here we go. We are selling. Why not, hey? Price just been ranging. Did make a break for our stop loss there, but it's moved back a touch now. Still in a loss for us at the moment. And there, the price getting up, it does trigger our stop loss, and it knocks the dots there underneath with the EMA pointing upwards as well, clearly giving a buy indication. But I think 5 losing trades in a row, it is enough. No more trades. This has proven to be a bad day. Each of these days actually got successively worse, right? Had two winning trades on the first day, a bit more trending. Second day, 1 winning trade, less trending. And then today, yeah, look at this, very rangy. This is where we started, and all these 5-minute candles, you can see how it's been incredibly rangy. Doesn't look like it's going to break out. I think it will just pop back down eventually and then just trigger a loss again down here. And we are also closing in on a 10% total loss here for the 3 sessions. So in the space of those 3 days, quite a considerable amount of losses, even with a managed maximum 2% risk. A lot of people like it on the daily time frame, so I just wanted to pull that up here. We're on the pound Swissy still, and just see how we would be doing if we were trading this on the daily over the last 4 months or so. Let's change it to a 200 average here and just see if that's going to make us any more. Again, you're going to be in that buy trend. That's going to knock you out there eventually at 60.9 pips. This buy trade here, you get in straight away. And again, gonna stop loss there, 40.6 pips. Buy trade there. That's going to be a loss down there, 96.9 pips. And a buy trade there, also going to be a loss down there for just over 100 pips. And it goes on like this. It's just on the pound Swissy here. Back on the 5-minute chart quickly, we can just see that if we had got in this buy trade, it would be coming back down already, the price. Not too good. But we did get 15 trades out of the strategy across our 3 sessions, so let's round them up in the journal. Here is the final journal. Let's scroll down to today's trades. There they are, 5 straight losses. As we said, 2 gains on the first day, 1 gain yesterday, and then none today. It wasn't actually looking too bad after the first day, and then the second day was starting to show some cracks. And then the ranging today really showed issues with the strategy. And these are some major losses as well. A lot of trades we are able with the parabolic dots to limit that 2% risk by the fact that we're dragging it forward every period. But here, some of these were coming close. $174 there, and then $246 ones down there. As we said, almost 10% loss on the account in just 3 days and 15 trades. And that's with a system that is trying to keep it managed. Yeah, and there's not really a huge amount to say about today's trades. They were all fairly similar. It just kept getting you back in and back in. And you can tell that by the times here. Look, 11:15 we were out, 11:30 back in. 11:56 out, 12 o'clock back in. 1:50, 1:55 straight back in. Sometimes it just ranges for a couple periods where it gives you that signal and you go in again at the top of the range just to get stopped out. And you can see that commission building up as well. That's just under 10%. The red runs heavy for the parabolic dots. We do have more to say about it though in our final thoughts. Okay, last chance now to express my opinion on this strategy. I think based on the performance, you're right to presume that I'm not going to be kind to this one. It is possible that if we'd had 3 straight trending sessions that we could have got some nice trades, maybe a couple small losses here and there, but we could have ended profitable. However, that is not what we got here. Instead, we got a lot of whipsaw price range, which, to be fair, that is what the market does a lot of the time. But when it's in that range, neither the EMA or the parabolic stop and reverse know what to do. They are both far too uncertain. If these indicators were people, that is when they would be breaking down in sweats, not knowing which button to press. And where we have seen price stay about the same for 90 periods, that is where the EMA has flipped back and forth within single candles. That extreme level of uncertainty is unwanted, and it was not a rare occurrence. We did get some glimpses of what the indicators can do when the market does trend, and it seems there's a good chance of squeezing extra profits out of the trades in a true trending environment. But still though, in our experience here, those trades were not enough, nowhere near enough to get back the losses from when we were in the range. We briefly looked at changing it up for a more alleged consistency using a 200 period moving average or the daily time frame. Don't get me wrong, there is a good chance it's going to be an improvement on the 5-minute time frame using the 90 period average. But from when we looked at it on the pound Swissy, I can't see that changing either of those settings would actually result in consistent profitability over time. There was a lot of losses on that chart still. On that basis, therefore, I could not in good conscience recommend you waste your time with a moving average parabolic stop and reverse strategy. If you are going to use these indicators, then add a lot more on top of them to try and get some bulk confluence. Find a method of getting away from those ranges, even if it means not making regular trades. Because across these 3 sessions, I do think we were entering too many trades. In a trend hunting strategy, you can be sure there is something wrong when the system tells you to be in a trade going one direction, and then just a few periods later, it pulls that U-turn and says, actually, no, let's go the other way. You would lose trust in the decision-making process of a person who is making skittish decisions like that, and so it is no different with a rules-based strategy. The trust is lost. If you absolutely are desperate for more information, then you might find some in the description. One final word of warning is to remember that this strategy was traded with demo money. If you are enticed by the results from this strategy to take it live and bet your remaining credit card balance on getting trading gains, and I can't tell you what not to do with your borrowed money. Thank you for watching. This is Project Trade, and I am the man with the iron chart. There will be more.